Walking through busy commercial financial districts, observers can easily sense palpable tension among professionals watching numbers flash across towering screens. Global financial markets are currently witnessing an extraordinary period of volatility, where sovereign defenses clash with overwhelming macroeconomic pressures. Market participants observed the Japanese currency settling around the key 157 level against the United States dollar recently. This return to weakness immediately followed an aggressive intervention that briefly pushed the exchange rate much lower before speculators rapidly regained control. Government reports indicate that the Ministry of Finance deployed approximately 34 billion United States dollars to defend the currency. Officials executed this massive purchase after the national currency breached the psychological 160 key global market trading threshold recently. Despite the unprecedented scale of the financial maneuver, the effects appear to be rapidly dissipating across international trading desks today. The United States dollar index has regained significant momentum and approaches recent market highs driven by resilient treasury yields and strict inflation control. The fundamental fragility of unilateral currency support becomes glaringly obvious in an era characterized by sustained geopolitical conflict and tension. The ongoing war involving Iran has severely choked global energy supplies and fundamentally altered global trade dynamics for the Japanese economy. Japan relies almost entirely on the geographic chokepoint of the Strait of Hormuz for its national energy security and imports. The region accounts for roughly 94% of total crude oil imports, entering Japanese ports to support domestic industrial production. A currency intervention can only remain effective in the long term if supported by a fundamental shift in local monetary policy. The Bank of Japan finds itself in an increasingly tenuous position, attempting to navigate between mounting inflationary pressures and fragile recovery. For the Japanese yen to gain value, the global market must believe in two key fundamental factors moving forward. The central bank must transition from a passive mode to an active interest rate hiking cycle to narrow the international gap.